Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video is for Wednesday, August 29th, 2012. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, folks, markets are acting much like they did the previous few days. Volume extremely light. Get this, at around 1:15 p.m. Eastern Time here, there is only 37.5 million traded on the SPY. Probably looking at around 55, 60 million today, which will be right around the lightest of the trading year. But this is normal. Remember, this is the holiday week where families are taking their last vacations before people go back, the kids go back to school. In addition, you got the Republican convention going on, distracting a lot of traders. You have a lot of factors like that that are going on right now. And again, the Labor Day weekend is coming up, the holiday weekend as well. So that makes for a very light trading session. Jackson Hole is Thursday, Friday, so that's a Bernanke event. Market's on hold till then as well. So all of that combined just makes for a light volume market. And that means the market should be neutral to positive. I don't care if the market goes up or down a little bit each day. My everyday analysis says volume light, neutral to upside as possible. Today, that's basically what's happening. Spiders are up about 35 cents on the day. The last couple days, we've been kind of flattish to slightly lower, but ultimately, you just kind of look for that light volume float, especially as we get closer to the Jackson Hole meeting over the next couple days. In terms of scalps today, there were some definite good ones, guys. This morning's session in the intraday stock chat was awesome. I would say in this light volume, you really don't expect to get much, but we probably had about 4 or 5 over the first hour and a half in terms of scalps, which was very, very profitable. There were some small caps, there were some large caps. It was what it was all about today. Spiders, you can see again, they're getting a little bit of an upward move here, and that's just again a result of the extremely light volume action here. If I zoom out, you're going to look at this level as being resistance. Let me just find this level right now. Looks like this little pivot high area is really what you're coming into. We're actually piercing it. If you notice yesterday, we pierced this line a couple times, but you never closed above. Today they're trying to close it above. Notice how it's pulling back as we speak. There's a little bit of a battle raging right around this 141.70 to 75 level. All right, if you get through that, where's your next stop? Well, you'll have a minor level of resistance on the spiders right here, and this will be at the 141.85 level. Another minor level right here at the 141.95 level, and then a major one at the double top right up here, which will be around the 142.05 to 10 level. And that'll be the double top going back to Monday, which will be a little bit bigger. I don't necessarily know if the markets can rally all the way up to that level because that would actually be a decently sized up day. Right now, we continue to see a market where you're not really falling, but at the same time, over the last couple of days, even in the light volume, we weren't going up. And in this light volume ahead of Jackson Hole, you would definitely expect a little bit of upside, and it's not happening. That's telling me that the volume is not having the positive effect that it normally would have. Therefore, you have to think that the markets may be in some trouble after we get through this holiday. All right, so just something to keep in mind, keep in the back of your brains for now. A couple other things to go over. Number one, you have to look at some of the shorts we have out there. I've been slowly, as I'm saying, accumulated shorts over the last couple weeks, inching into the market on the short side, and that's working beautifully. What do I mean by that? Well, shorted gold a couple days ago, really towards the end of last week, on a big pop to about 162 and a quarter or so, and already at the lows of today, we were in the money basically $2 on that short. All right, Valero shorted this yesterday. Already in the money nicely on this one as well. You can see we shorted it right up here at this pivot top, master level right there, and it's pulled back nicely, getting a little bit of a float up with the markets. But the point is, I love in light volume where the market's basically flat to positive. If our shorts based on PPT methodology are correct, we're going to make money. It's just that simple. Now, again, maybe you won't get a major downside until the more volume picks up after this week, but at the same time, you're just putting yourself in a position to constantly reap rewards and profits. And bottom line, I mean, that's what it's all about, right? I mean, we're looking, no one's in the market not to make money. I mean, if you're investing and if you're trading, if you're day trading, whatever it is, you're trying to make money. And that's what the PPT methodology does, folks. PPT, price, pattern, and time. Proprietary to InTheMoneyStocks.com. It is literally things that my partner Nick and I have spent years, decades discovering, and it works. And that's why our membership continues to grow day after day, because they continue to make money. Assuming they follow the rules of PPT, you make money. All right, we have some pikers that come along every once in a while that don't follow the rules and they don't take the time to learn the PPT and then they lose. I mean, it's just that simple. But 99% of people come here, they want to learn, they're open to it, they're educated, they're intelligent, they have a little bit of money, anything 10,000 or more in their pocket there to play with, and they make money. And literally, you're making money not just in terms of 5%, 10% a year, which the mutual funds and the hedge funds make. You're making 50%. If you're a good swing trader, you're making 50 to 100%. And that's just that simple. You follow the rules, you do it right, you make that type of money. All right, let's go over to a couple other charts here. Let's take a look at the dollar today. The dollar is hovering just slightly to the upside on the UUP. What I think is interesting here on the dollar chart is you're right around the 200 MA, and again, this is a very, very important level right here, which we continue to hover around. You have this little pivot low right here as well. I'm just going to draw on support lines. So you're really hovering right around major support. In addition, even if you go a little bit lower, the dollar has a ton of support here. I'm basically neutral to positive on the dollar based on where it is. I do think there's a small chance the dollar could fall just down a little bit to this line. I don't think it goes lower than that. All right, so again, I'm actually I'd give myself a slight bullish bias on the dollar right now. Therefore, I have a slight bearish bias on commodities, including gold, silver, and oil, and pretty much every other commodity, just a slight negative bias. But most of those downsides should be seen after this week, in my opinion. I think after this week is when you'll see a majority of that. All right. Going on to a couple other charts out there, let's see what Apple's doing today. Apple's basically flat, nothing going on there, up 2 cents on the day, about as flat as you can be on Apple. Taking a look at Google, which is having a decent day, this stock is breaking to the upside, making a new high here, new 52-week high on Google. I think this goes above 700 now. Assuming the markets don't collapse in the next few days, I could see this getting to about the $700 level by early next week, and then it'll start to get interesting in terms of a short. I'll be watching it very, very closely. I'll give out the signal to my members. One chart that I gave to my members last night, guys, on a small cap side, which worked out beautifully today so far, was this chart, BORN. It's a Chinese play. Look at the beauty of this chart pattern. I mean, you don't see anything better than this. This is like a dream come true. This is like finding, I don't know, the golden ticket or something like that. But bottom line is, look at the perfect bullish flag pattern. The necktie crossover here between the 20 and the 50. It's basically lighting it like a stick of dynamite and blasts off to the upside. And sure enough, I gave this to them. It was basically trading flat to negative early in the morning. All my members that picked it up got it super cheap. And then sure enough, price pattern and time, PPT methodology, comes through and it goes higher. All right, beautiful there. Another stock that I gave out, and this one I gave out Sunday night. We do No Hype Lives, which are part of the research center, as well as the daily analysis videos, the swing trade hot charts and alerts, where you get swing trade alerts. All that kind of stuff is all part of the research center, which is geared towards swing traders and investors. But the point is, the same type of pattern here: bullish consolidation, beautiful pattern. Sunday night I gave this out. Everyone picked it up on Monday, right around the 4.25 level. Yesterday it popped all the way up to 475, basically 10% plus gain on that. Pulling back a little bit today. It's over. The play's over now. I mean, as swing traders, you look for that 1-2 day pop and you're out. And that's the best way to trade. Anyone who invests long term, you're leaving yourself open to crashes. You're leaving yourself open to nonsense that the Federal Reserve is printing too much money, all that kind of stuff. What we do here is we're in and out of the market. This way, you only expose yourself to risk when you're in the market for a day or two, and then you're back in cash. And that's the beauty of it. I mean, if you think about it, that's the genius of it. Because when you're in cash, you can't lose your money. It's basically sitting in your account in cash, not being invested. When you're in the market, you're at risk. So therefore, investors who think, oh, long term, if I just hold, I'm going to be okay. The worst thing about that is they're mistaken. Long term, the longer you hold, the longer you're giving yourself risk based on market crashes and depressions and recessions and Federal Reserve nonsense and Europe and China. So again, learn the methods. The PPT methods will set you free. They will take you from a mediocre, hopeful, praying trader, emotionally bound, to the point where you're an investor, swing trader, day trader, and you're making money consistently on every single market move. Mark my words, folks. In the Money Stocks is the place all great traders are. And again, they don't come to us as great traders or investors or swing traders. We make them that way when they learn the PPT methodology. Come join us here, folks. Take the 7-day free trial. Research Center is for swing traders and investors. Day traders go into the intraday stock chat. Become part of the elite. Become the 1%. Become a pro. Take care.